Hi, this is Kelvin here. Welcome to this week's latest weekly technical outlook on the major stock indices. So before we start on the trend biasness as well as the key levels to watch for this week, let's have a quick recap of what happened last week. So as we know that last week we did have a quite a volatile week where most of the major stock indices, which inclusive of the S&P 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and as well as the German 30, ended the week with a weaker footing. So, what's the main cause of this kind of negative shock in the global stock market? Is primarily due to this pretty much rapid ascent rally of these two penny stocks, which is in US GameStop as well as AMC Entertainment, where very strangely it kind of a kickstart a kind of a major revolution where retail traders are going against short sellers, which is professional short sellers, as in hedge funds. So the rapid rally of close to more than 300 to 400% of game stocks, as well as 100% on weekly return on AMC, kind of a forces a short squeeze on these two stocks, where professionals players or traders and as well as hedge funds they got to actually cover their short position on AMC, on GameStop as well as AMC. So there is a kind of a charter battle in the market saying that previous winners, such as we're talking about US big caps as well as the cyclical stocks that has been performing very well since the last quarter of last year, hedge funds got to actually take up offload some profit of this profitable position to actually cover their losses in GameStop as well as AMC. All right, so that kind of a create a negative feedback loop into the broader stock indices as a whole. So what we could see last week is that last week at the start of last week we kind of remain pretty bullish, but we tighten our key medium-term pivotal supports for all the indices that we cover. That means we're talking about the S&P 500, the Nasdaq 100, the Hong Kong 50, and the Japan 225, as well as German 30, to have a better risk management perspective. So late last week, all these indices kind of tested or challenged their medium-term pivotal support, with the SPX breaking below the Titan pivotal support at 3750, as well as the Nasdaq 100 breaking below 13,020. So where do we have or where do we go from here? So before we start, let's take a look at the disclaimer slides first. All right, so let me take you all through the CMC markets platform. So before we start taking a closer look at the trend bias for the various indices, one of the growth proxy that I would like to, or I always monitor, will be this will be this semiconductor ETF, the stocks in short form SOSX, listed on the UX stock exchange. So if you could recall last week that it actually failed to break above our key medium term target or resistance at 42190, and last week I did highlight there's this bearish divergence where we expect a kind of a pullback. So that's why it gives me a kind of a better risk management perspective to tighten all the various or respective key medium term pivotal support of all the indices that we cover to have a better risk management perspective. So what we could see over here is that it actually ended last week in pretty much bad shape as well. So if you look at from the high of 20th of January, so far it has already declined by close to 8%. All right, 8% based on last week's low, which is at 388.29. So momentum indicator wise, on the daily RSI is still pretty much negative after breaking below the support at 57 level. It still has some more room to go before hitting this previous swing low on 28th of October at 37 or 36 level, and also still leave a bit of room to maneuver to the downside before hitting the oversold region. So all in all, what we could see in terms of this price action of stock is potentially it could see a further pullback to actually test this support zone, which is at 365/364. So if you were to look at from last week low, all right, okay, hitting the upper boundary, close to about 5.8% more to go at 365. Lower boundary will be at 354. Okay, what is this 365, 354? It's actually the major ascending support, trendline support in place since 18th of March 2020 low, which indicating to us that saying that since price action is just trading above this ascending trendline support, the major uptrend is still intact for stocks, which imply to us that whatever move that we see right now is still corrective in nature. The chances or to actually start to see a major reversal to actually correct this major uptrend, it's still low in terms of probability at this juncture. And this 365 slash 354 is also coincide with this former swing high of 9th of November, and as well as the entire major up move taken from the low of 18 March 2020 to its current all-time high at 21st of Jan, which is the 23.6% Fibonacci retracement level. So bear in mind that do keep a close watch as this support level to look out for any potential bullish reversal candlestick pattern to indicate to us that there's a higher probability that another round of impulsive uplift sequence may start to materialize from here. So meanwhile, on the shorter term basis, we're talking about maybe uh, 1 to 3 days, we could still see a potential further slide from here. So this gives me to boils down to a kind of a conclusion on the US market, the SPX as well as the Nasdaq 100. That I'll be sharing with you in a while soon, that we could see a 1 to 2 days or 1 to 3 days of pullback first before a potential impulsive uplift sequence starts to take shape. Okay, now let's go on and cover the SPX 500 in greater detail. So let me start off with the daily chart first. All right. So what's interesting about the daily chart is, yes, last week we have a pretty bad weekly decline, close to 3.3%, which is the worst weekly decline seen on the SPX 500 since October 2020 last year. So what's so interesting is where it ended. Actually, it's actually ended right at the former expanding wedge resistance. Okay, that was broken out in early part of December last year. Now turns into a pullback support, and it also kind of confluenced at the lower level at 3640 slash 580, which is this congestion zone over here. All right. So what we see on the daily chart over here is, yes, daily chart, the daily RSI is below the previous support level, broken below it, which is resisted at the 50 level. Still a bit of room more to go before hitting the 37 level corresponding support as drawn from here. So all in all, what we could see is that potentially we may see a bit of residual pullback that has yet to complete to actually test this support zone here, 3640 slash 580. So what's slash 580? 580 is actually the former major swing high of 2nd of September 2020, now turns into a pullback support. So now let's go on to the 4-hour chart. All right, so 4-hour chart over here is that what's pretty much consolidating or comforting is that the 4-hour RSI has started to shape a bullish divergence from here. So you could see last Friday, it plunges a low, lower low, but however the RSI is not reflecting a lower low, it start to shape a higher low, indicating to us that on the shorter term there is a potential chance of a reversal at this point in time. But however, on the daily elements is still kind of a pretty mixed as per se. So what I could do over here is that we may be we may start to see another drop down close to this 3640 slash 580 level, which is also the former swing high of 9th of November 2020, turns into pullback support. Previously managed to find support on the 21st of December plunge, okay, but didn't have a 4-hour close below it, and thereafter it start to churn up higher. Okay, then also if I were to draw a Fibo retracement level, all right, taking from the entire this medium term uptrend, or this entire uptrend, pardon me, starting on 31st of October 2020 low, all right, from here is actually 38.2% as well. Okay, let me draw it properly. Okay, you see 38.2%. All right, Okay, let me adjust it for you. Okay, 30.2% from here. Okay, which correspond to this 3640 slash 580. So what we have is I have a upside trigger level to actually kind of reinforce my this bullish view on this SPX 500. So all in all, what we accept that in just to make everything clear is that number one, the major uptrend is still intact. Yes, last week see a breakdown below 3750, which is our Titan pivotal support, but it hasn't altered the major uptrend move off on the SPX 500 yet. So for this week, our strategy is actually to look for a bullish bias, but look for a potential further dip down first, very close to 3640 slash 580. Then thereafter using 3750 as an upside trigger level, where if we start to see a 4 hour close above it, we could start to see potentially the start of another impulsive up leg to actually target 3880 followed by 3960 slash 3990 next on the SPX 500. All right, so definitely if we start to see a daily close below 3580, then we're talking about this impulsive recovery or impulsive up leg will be game over, where SPX will start to see a kind of a 1 to 3 weeks of multi-week of corrective decline to target the next support at 3470. All right, now moving on to the Nasdaq 100. All right, so let me start off with the daily chart first on the Nasdaq 100. Okay, so over at the Nasdaq 100 over here, what we could see is that the next support level after the Titan 13,020 level is broken down on the downside will be at this 12,370, 12,090 level, which is this former range resistance of 1st of September, 12th of October, 6th of November taken out, now turns into a pullback support level. And if you look at the RSI, the daily RSI has still a bit more room to go before hitting a key corresponding support at the 39 level. All right, so indicating to us that similar to the SPX 500, we may still see a kind of a further residual push down before we start to see another round of impulsive upleg to actually take shape on the Nasdaq 100. Now going to the 4 hour chart, so if you look at the 4 hour chart over here, similar as well, it start to shape this bullish divergence on the 4 hour RSI. So what we have over here is that potentially we may start to see a bit of push down first to 12,525 with 12,370 as my key medium term pivotal support for this week. Then thereafter breaking above 13,020 level, a 4 hour close above 13,020 level, which was last week Titan key medium term pivotal support. Also now a pullback resistance from this former minor ascending trend line support now turns to pullback resistance from 10th of November 2020 low. A 4 hour close above this 13,020 will actually reinforce the start of another potential impulsive upleg to target the next resistance at 13,825 slash 13,875, maximum 14,100. So however, if we start to see a daily close below 12,370, then the this another leg of impulsive up leg will be game over. This where we may start to see the start of this 1 to 3 weeks of multi-week corrective down move to target the next support level at 11,800 on the Nasdaq 100. All right, now let's move on to the to Asia will be the Hong Kong 50. So what we have the Hong Kong 50 over here is, let me go on to the daily chart. Okay, let me switch to the daily chart first. Okay, so this Hong Kong 50, right, is actually one of the kind of a star outperformer among the major stock indices. Last week, the Hong Kong 50 has hit the previous week upside target or the medium term resistance at 13,060 slash 13,280. So we kind of tightened the key support level to 29,140, 29,140. It has really taken down on the downside. So what's interesting over here is that last week decline actually managed to stall at the medium line channel of or the median line of this ascending channel that I drawn or that is in place since the low of 25th of September 2020, And what interesting is that the daily RSI has started to bounce off from this support level over here, which is okay. Let me draw the support level. If I were to connect the lows from here to here, it actually bounce off from this support level, which is also the 50 level mark as well. So all in all, what we could see is that this medium term uptrend, it actually remains intact on this Hong Kong 50 index. Daily RSI starts to turn positive again, which is actually supportive of a further bullish reversal from here after last week the corrective decline. So if I were to go to the 4-hour chart, all right, the 4-hour chart. Okay, so over the 4-hour chart, I will use 27740 as my key medium term pivotal resistance or pivotal support for this week. Pardon me, 27740 as my key medium term pivotal support for this week. The 4-hour RSI also shaping a bullish divergence signal as well. All right, so looking for a push up to retest 13,060 slash 13,280. If we start to see a 4-hour close above this level, then thereafter this movement will actually reinforce the start of a potential impulsive uplift sequence to target the next support pardon me, the next resistance at 21,600 level. So what's this 27,740 is actually the median line of this ascending channel, and as well as the 23.6% Fibo retracement of this ongoing medium-term uptrend that is in place since 25th of September 2020 low, taken off to last week high. All right, close to the 23.6% Fibonacci retracement level. Okay. Okay, so now let me go on to the Nikkei 225, or the Japan 225 we call it in our index, in our platform, pardon me. Okay, let me start off with the daily chart first. So on the daily chart, right, if we were to look at the Japan 225, where it actually stopped, right? It actually stopped at this 27,500 level, which was last week decline. Also has the kind of negative feedback loop on that is being fit into it, caused by this major rally on this US penny stock space that is actually having a kind of a negative feedback loop impact on the bigger cap stocks, which definitely fit into the major stock indices. So this 27,500 is actually the former swing high area of 29th of December 2020, and also the 23% Fibo retracement of 30th of October 2020 low, where that's the start of this ongoing medium term uptrend. All right, so let me draw for you the Fibo retracement. If I draw it from here, you could see, yeah, 23.6% as well. So and also the 50-day moving average, which is also previously I think as a support level after during this congestion area, this multi-month congestion area that has taken shape since this 18th of August. All right, so now I think as a support level at 27,500. And what interesting is that the daily RSI has managed to recover above the 50 level, and also the former resistance now turns into a pullback support as drawn over here as well. Okay, now going on to the strategy chart, which is the 4-hour chart. All right, that I have for you. So, oops, sorry. So using 27,500 as the key medium-term pivotal support for this week, looking for a potential recovery to actually target the next resistance at 29,440 level. All right, and also the 4-hour RSI has also started to shape this bullish divergence as well. Okay, now going on to the German 30. Okay, so the German 30 is in fact among all the indices that I cover, they are kind of underperformed because they actually started to trade in a kind of a major sideways formation since 15th of December, after this bullish breakout from this descending range resistance that taken from the high of 20th of Feb. So what's interesting is over here is that last week decline actually stopped at this zone over here, which is the 13,300 level slash 13,050 level. the swing low area of 11th of December and 19th of December, and as well as the pullback support of this former range resistance from 20th of Feb 2020 high. All right. So what's interesting as well is that the RSI also shaped a rebound from this corresponding resistance, now turns into a pullback support at the 39 level. So all in all, what we could see is that support still pretty much holding on the German 30 index despite last week sell off. All right. Then what we have for this week is that because of this support that is still holding, we are quite hesitant to actually turn bearish. Okay, so what we do over here is that we actually kind of a looking for a kind of a potential. Yes, you could still shape a kind of potential residual push down, similar to the SPX 500 and the Nasdaq 100, but using 13,050 as the maximum level to actually cap the potential we call it a minor decline in price action of the German 30, which is using 13,050 as a key medium-term pivotal support level. Then thereafter, if we start to see a 4-hour close above 13,700 level, which was last week, close to last week, I would say a key last week key medium-term pivotal support that was tightened or that was maintained. A 4-hour close above this level will kind of reinforce the start of this another round of impulsive upleg to actually target the next resistance at 14,315 next. So but however, if we start to see a daily close below 13,050, all bets are off for this start of this new impulsive upleg, where we could start to see a more pronounced corrective decline, which is about 1 to 3 weeks towards the next support at 12,400. So what's 12,400 is actually this area here, right? The former swing low of 25th of September, tested previously on 6th of November, rebounded, and also the 61.8% Fibonacci retracement of this entire up move from 30th of October to this 8th of January high. All right, 61.8% retracement. So overall, just have a quick recap of what we are expecting this week. Is the one that is outperforming the market right now will be the Hong Kong 50 index, still maintaining that bullish biasness. As for the rest of the indices, we kind of expect a bit of residual pullback within their key medium-term uptrend that is still intact, and definitely the major uptrend of all these indices that I cover are still intact as well. So but however, what I have is we have a key trigger level to actually need to kind of reinforce the start of this impulsive upleg. For the German 30 will be at 13,700, and on the SPX will be at 3750, and the Nasdaq 100 will be at 13,020. All right, so that's all I have for this weekly outlook on the major stock indices. Have a great trading week ahead, and I see you all next in my next video.